Do you want to learn how to identify key levels, how to spot support and resistance, supply and demand zones? In this video, we will execute structure analysis on gold. We will analyze the key levels, and I will share with you very useful tips. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And let me explain to you in brief why key levels is so important. Key levels are the points, the zones, the areas that were important for the market participants in the past. In the past, the price reacted to key levels, and from key levels, we see these significant price movements. And we assume that if this certain level was important for the market participants in the past, it will certainly be important for the market participants in future. For example, here on Aussie dollar, we have a very nice horizontal key level over here. And you can see that that key level was very important for the market participants in the past. And then you can see that 2 times more in a row, that structure was respected. And from that structure, the market dropped. And here we can also spot that very strong support. And you can see how nicely the market reacts to that support. And of course, from that resistance and from that support, we could catch very nice moves. So we are trading from key levels, and we assume that trading from key levels, we can make nice profits. Returning back to gold chart, let's analyze the historical key levels. Let's identify the areas from where we will trade. And in order to identify key levels, first of all, you should just analyze the recent price action. And here, as you can see, just recently, the market started to fall. Yes, you can see that once the market reached that level, the market started to fall sharply. And your task is to check if the level from where the market started to fall is the key level or not. So simply you pick that level and you draw the horizontal line. And with that in mind, you look left at structure. You look left at structure and you check if the price has already tested that level in the past. And looking left at structure, you can see that over here, we have a very peculiar zone of supply. What do we mean by the zone of supply? Zone of supply is the area based on the wick of the candle. Yes, it is based on the level from where the market dropped sharply in the past and the candle close of that candle. So here we got a very important historical structural resistance. It is the all-time structure high from where the market dropped sharply in the past. And of course, no surprise that that structure was respected by the market this week, right? So here's our first structure. We spotted our first resistance. And of course, from that resistance, from that zone of supply, we can look for shorting opportunities. Now let's check some other key levels. Hey guys, subscribe to my free Telegram channel. Get exclusive forecasts and signals daily. Get exclusive educational material and tips. It is called Vasily Trader. The link in the description below. Subscribe now and let's continue. The simplest way to spot the key levels is to draw the trend lines based on the impulse lags. So simply you consider the wicks of the candles and you draw the trend lines based on the highs and lows of the impulse lags. Yes, so you can see that applying the wicks, yes, the lows and the highs, I simply underlined the most important recent price fluctuations. Why is it so important? Because doing so, we can spot the exact points that were important for the market in the recent past. And based on these points, we will draw the key levels. For example, traders, take a look. Here we got a quite strong resistance, yes, from where the market retraced. And then after the breakout, that structure here turned into support from where the price bounced. So here we have our key support. And you can see that I draw that support, taking into consideration the candle close and the wick, right? Then, bit lower over here, you can see that the price bounced from that structure, yes, then retested that, and from here, a strong bullish movement initiated. So here is our second support. It is the demand zone, and the demand zone here is based on two supports. So you can see that here we got our support and here we got our support. So when we draw the demand zone, we simply unite multiple structures in one, right? So that is the area that will be the second important horizontal key support. Then looking lower, you can see that from that level, a bullish movement initiated. So again, it is a key support, and we draw that taking into consideration the candle close and the wick, right? So these are the horizontal structures. And you should always remember that when you analyze the key levels, that key levels can be also vertical, yes, based on the trend lines. So once you spotted the horizontal structures, you should look for the vertical structures, because vertical structures are very important as well. Let me show you how to do that. When you are looking for vertical structures, you should remember that we strictly draw them based on the wicks of the candle, not based on the bodies. Yes, it is a very important rule to follow. One more very important rule to follow is to pick the trend lines that were respected by the market at least 3 times in a row in the past. Not 2, not 1, at least 3 traders. So following these rules, I have spotted here that trend line. Yes, do you see that following trend line right here? So that trend line here was a strong resistance, right? And you can see that 2 times in a row it was respected. And then after the breakout, it turned into support from where a bullish movement initiated. So that trend line here is based on the wicks, and it was respected 3 times in a row in the past. So it is the valid vertical support. One more very important trend line here to note is based on that low. Yeah, if we draw a trend line from that low, you can see that here we have one more very important rising trend line. And again, we draw that based on the wicks, right? And you can see that that trend line here is based on 3 touches. Yes, 3 times in a row it was respected. So now our chart here looks like a complete mess. First, let's remove our impulse lags because they really distract. And then let me tell you how exactly you should apply all those key levels and how to spot the supply and demand zones based on the confluence between the vertical and horizontal structures. And I guess you would agree with me, traders, that without the impulse lags, the chart looks much better. So once you analyze the key levels with the impulse lags, don't forget to remove them, yeah, because they really distract. Then over here, traders, it is very important for you to realize that occasionally it is better to perceive the vertical structure and the horizontal structure as the zone of confluence. Over here, traders, we have this falling trend line. Yes, that was a very strong resistance in the past, and that turned into support after breakout. And also here we have that horizontal support. And technically speaking, here it will be much better to unite these 2 structures in one, so that the broken trend line and that horizontal structure would compose the expanding zone of demand. And once the market will approach that zone of demand, we will expect the accumulation of buying volumes within that entire area. And from that entire area, we will expect a bullish movement. And traders, trust me, it is much better to unite the structures than to treat them separately. Anyway, now it is the moment to teach you how exactly apply these key levels in your analysis. And now we should add one more very important rule. Remember that occasionally the market breaks the key levels. And if the market violates a key resistance and closes above that, then the key resistance turns into a key support. And if the market violates the key support and closes below that, that key support turns into the resistance. With that in mind, analyzing gold chart, we can spot that yesterday, on Friday, the market broke and closed below that rising trend line. It means that that trend line turned into a very strong resistance now. And you can see that after the breakout, the market didn't manage to reach that support. Even though the market dropped, that confluence zone wasn't reached. So with that in mind, we can predict that most likely next week the market will keep falling. Remember, traders, that for the market participants, for the big players, key levels are the magnets. Yes, and the market tends to reach the key levels because around the key levels there are the market orders, the source of liquidity. So we can expect that the market may keep falling next week to that zone of confluence. And the best point for us to look for shorting will be the broken trend line. Yes, so it will give you the safest point. Then, once the market reaches that support, from that support, we will look for buying opportunities. We will expect the accumulation of buying volumes within that zone, and we will expect a bullish continuation to our closest strong resistance. Our closest strong resistance will be that zone of supply that we spotted at the beginning of this video. Also, we should remember that the market may break that zone of confluence, and the breakout of that zone of confluence will simply push the market lower to that support. So following the reaction of the price to the key levels, we will quite accurately predict the future direction of the market. And remember that the breakout is one of the most accurate signals. Yes, so spotting the valid structure, spotting the valid breakout, you can quite accurately predict the future direction of the market. Remember, traders, that in order to accurately spot support and resistance, supply and demand zones, you should practice. You should draw different zones, areas, the trend lines, and check how the market reacts to them. And with experience, you will find out how to spot the strongest ones. Traders, don't forget to check my free Telegram channel for more tips, for more education, for more first signals. Also, traders, if you have any questions, if you want to see more videos about structure analysis, let me know in the comment section. I always reply. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.